Good morning and welcome to this edition of the video market analysis from ADS Securities Abu Dhabi. The first trading day of the week comes in with a few economic releases across the day, while the US banks will be closed in observance of Martin Luther King Day. Therefore, we will have a look today at the week ahead, as we will be waiting for many key economic releases and events which are likely to have a notable impact on the markets across the week after last week's decision, or after last week's turmoil caused by the Swiss National Bank decision. As noted, there are a few economic releases across the day today, and the markets may also trade within a tight range across the day. However, the next Asian session is expected to have a notable impact on the markets, as all eyes are headed toward the Chinese figures. First of all, the Q4 GDP is expected to grow by 7.2%, which would be the lowest level or the lowest growth rate since the first quarter of 2009. However, the industrial production is expected to rise for China again by 7.4% in December, comparing to 7.2% in January. During the same day, which is Tuesday, another key release will be out from Germany. The ZEW economic sentiment is expected to recover further toward 40.1 in January, up from 34 in December, which also would be the second positive reading in a row and the highest level since, or the highest reading since March of last year, which may ease also the speculation again for a full QE or full scale of QE by the ECB this week. However, we believe again that the ZEW may disappoint again, as previously noted. On Wednesday, all eyes again will be headed toward the Bank of Japan, first of all, which is likely to keep the current policy unchanged in this meeting. However, the possibility remains for further measures, especially after the Swiss National Bank decision of last week. And during the same day, we will be focusing on the UK's job report, which will be released at around 9:30 GMT time, and the estimates are positive for the month of December. The claimant count change is expected to decline further by 24.2 thousand, and the unemployment rate is expected to ease back below 6%, down toward 5.9%. However, the key figure in this report again is the average earnings index, which is expected to rise by or toward 1.7% year over year, up from 1.4%, which would be also the fifth monthly increase in a row and the highest reading since April of last year. However, any disappointment from the average earning index is likely to ease the speculation for rate hike by the Bank of England later this year, and may push it back, or may push the speculations for rate hike in 2016 instead of the end of 2015, especially after the inflation also eased back sharply last month amid the continuous decline in oil prices. During the same day again, which is also Wednesday, the Bank of Canada is expected to keep the current policy unchanged. However, we will also be waiting for any remarks from the bank regarding the decision of the Swiss National Bank last week. On a Thursday, which will be the biggest day of this week, as everyone will be waiting the ECB or the European Central Bank's decision, and the speculation are rising for that the ECB will announce a full scale of QE this week. However, over the weekend, there were some remarks by some officials, or some of the ECB officials, who stated that the size and the timing of QE has not been decided yet. However, we believe that the ECB may follow the Swiss National Bank decision and may cut the deposit rate further from the current level, which is around minus 0.2%, toward minus 0.5 or even minus 0.75%. And if so, this would be a disappointment for the markets, and as the market we're pricing in further QE or a full blowout QE since the previous meeting, and therefore the euro may rally for a while even if the ECB cuts the deposit rate again. The next day, or the next key event for the week, will be during the weekend, as the Greek parliamentary election will take place, and the outcomes will be significant, will be very significant, especially if the anti-Eurozone parties took over, and this will increase the possibility for Greece to leave the Eurozone. These are the economic releases that we'll be focusing on this week, which will be a key for the next few weeks as well. And finally, we will take a look again at gold and silver. Last week's decision by the Swiss National Bank sparked a notable rally in both gold and silver, and gold ended the week higher toward, or reaching as high as 1,282, adding 4.72% across the week, while the silver soared by 7.75% and closed the week well above $17.50 per ounce. And these moves seen as evidences again that gold and silver has restored their safe haven status, and the recent data from the CFTC shows that the silver shorts collapsed to the lowest level since August of last year, while the longs also increased by 5% last week toward the highest level since August also of last year. And however, those data are until last Tuesday. Therefore, we will be waiting for the latest figures or the latest data to be announced next Friday, which is likely to show a significant increase in gold and silver longs and more declines in shorts following the Swiss National Bank decision. This is it for today, or this is it for the week, or a look at the week. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.